Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 29 of the Forex market review. Today we're going to look at a pair which was unsuccessful early this week and a couple of pairs which may start to deliver later this week or early next week. Let's jump straight to those charts. So the first pair we're going to look at is the Euro New Zealand. We took a trade early this week and looking to go short on this pair. So what we saw on the daily time frame, we saw the price started to push back higher, retest this DSR zone here, and then start to push back lower. So we're looking to sell the position. It came down, touched this daily 200 EMA line, and that was a clue that maybe it might not push through, but if it did, we're going to try to get down to this DSR level there. But following the rules, we look at the 4-hour chart and we look for our AO divergence. So here we had our higher high in price, followed by our lower AO. So because we had our divergence, and it was just divergence, we don't worry about if it's just come or if it's a nice lower low, like something like that. It doesn't matter as long as the peaks are higher and the AO comes back below the zero line and then makes a lower AO when going short, then that's an official trade. We then want to see a nice pull down, which we had. We look at the 1-hour chart and we observe the largest AO. So here we can see on the downside there's a lot of small ones, and this is the first large AO to the downside. We then look for wave 1, 2 is somewhere up here. We can't really find that, but because we know this large AO is 3, when it's come back above the zero line about here, we find that lowest point, and then we drag it all the way back to roughly the beginning of the AO, which is around about these levels here. But if you're unsure, you just drag it to the top, and that will just give you a worse than expected number. So you're really wanting to pull back a lot further up. As you can see, the 38.2 is here, but if I was going to pin it somewhere down here, it drops down a little bit lower. So this just allows for a bit more of a pullback. The price came all the way back, touched this 1-hour 200 EMA line, which we like to see. Started to push back lower, took an entry position, stopped somewhere up around here, around 150 pips, looking to definitely move to break even down the bottom there and riding it down to here for our 1 for 2. Unfortunately, as you can see, price then just shot straight up and stopped us out. So right on this 1-hour candle here, if I go ahead and drop a line on it and zoom down to the 1-minute chart, what we'll find in that 1-hour time frame, a large move had occurred, and you can see from here all the way up here it jumped up 130 points or pips in 1 minute. So because of that large movement here, personally I had my stop loss around about these levels here. I actually took worse than expected, an extra probably 20% loss on the trade because of this fast moving price here, and that was all because of the New Zealand CPI number came out and it was worse than expected. They were expecting to rise to 0.2 and it flatlined at only 0, so that was worse than expected news. And because the Euro New Zealand was worse than expected, we expect to then see Euro strengthen. So any pair against the New Zealand would have strengthened, and the Euro did, which stopped us out. However, it was an official trade, and sometimes they don't pan out that way. But if you had have taken the WS30 trade, which was taken early last week, and you had that big gap down, that delivered you 1 for 2. So you should still be in profit for the month if you had taken both trades, exiting out of 1 for 2 for that one, and then taking a slightly bigger than normal loss in here, but you should still be up front. That's the reason why we always like to make more on our winners and our losers. That way, in this case, we've got a 50-50 ratio, one win, one loss, and you would still be up in front because your winning was double than what you're losing. 3 pairs coming up for the week. First one are Euro USD. So this one's a short position. So as you can see, looking left, it's coming up into the DSR zones over here. So where do we think it's going to go? Well, the first thing you do is start dropping some lines down here, and that's probably where it'll start finding some first support levels and maybe bounce and then push back higher, and then you would want it to push back lower from there. Do we have our divergence? We do. Higher high in price, lower AO, it's back below the zero line. So we had divergence from this hump to this hump and this to this one, but because it's made a new high, we can just use those two extremes. We can always miss one in the middle if need be. Drop down to the 1 hour chart. We really need to see, like I said, that nice move lower. It may come down to these levels before pushing back up, but if not, we really need to see a large AO like this to the downside. So because we've got another one up to the upside, it may come down and push a little bit higher and give us some divergence before pushing lower. So this trade could be days away and likely may not occur until sometime next week. Pound CAD, we're looking to long this one. So long the pound against the Canadian dollar. It's come down, hit some DSR zones. Drop down to the 4 hour chart. Do we still have our divergence? As price is stepping down, AO is stepping higher, so in the opposite direction. So that's our divergence. Clear could come back above the line here before making its higher low. So we really need to see a push up. So this could be one, back for two. So we really need to see a nice move up higher. Get a nice large AO, like similar to sort of like these ones here, to the upside. So it's going to engulf this one, go a lot higher. Then watch for that pullback. And then after that pullback of minimum 38.2, we then want to see it rally back higher. And where we think it's going to go, obviously we use our Fibonacci retracement tool to the minimum 38.2. That's where it will tell us where we think it might go for our entry. And then we use our Fibonacci expansion tool from the start to the end and back down to the furthest point it goes. And then we're looking at the expansion area, 61.8, 100 or 127. And depending on where they line up with the daily DSR zones, as you can see, this one here is lining up with the 100 level. So I definitely would be getting out around those levels if I can get my 1 for 2 risk to reward. The last one we're looking at is a pound USD. So the last one we're looking for strength in the pound against the Canadian dollar. Here we're looking at weakness in the pound against the US dollar. So the Canadian dollar is also affected by the oil. So just because this one here, we're looking at buying it, doesn't mean that won't happen, especially if the oil starts degrading in value, because the Canadian dollar is heavily invested in oil. For this one here, we can see resistance at the DSR levels. We're looking for our divergence. We have our higher high in price and lower AO. So it meets the criteria, come below the line, so it's clear divergence. So we really need to see it push back lower. We might find it might push a little higher initially, maybe even break the highs and give us some divergence. We really want to see it push down, then retest, and then look for an entry at our minimum 38.2 and then push down lower again. Where do I think it could retest? At this DSR zone here would be my guess. And once it's done that, we'd enter the trade, put our stop losses somewhere up here, and look at getting 1 for 2 or 1 for 3 down the bottoms there. Remembering to always look for levels of support and resistance so you can know where to get in and where to get out of the market. So if it does retest this DSR zone, it's probably going to find some support between here initially, and if you can get your 1 for 2, then you get out at those levels. Thank you for that. That was week 29 of the Forex market review. So that was a quick session today. As you can see, only a few pairs to observe, 3 of them to be in fact, and most of those are unlikely to occur until probably sometime next week. So we just keep an eye on them over the next couple of days. Enjoy yourselves, go to the movies, see friends, take time out, walk the dog, spend family time, whatever you need to do. And that's the great thing about the type of trading I like to do, because there's only about 2 or 3 trades that generally set up each month. It gives me a lot of opportunity to do things that are more important in life, and you want to minimize the time that you do trading. And this type of trade setup, you can look at it once a day. It's really only looking at it once the trade's entered in, and then just putting your stop loss and take profit and letting it run, and just reviewing it now and again. So choose a system that works best for you. Determine your own risk to rewards. Follow and take your own financial advice. However, here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.